Good morning, everyone. Um, I will do the moderation in English, but some of my panelists will be speaking in French as well. So just bear with me on the moderation part. My name is Dennis Nderitu. I work with the Global Energy Alliance for People and Planet, and the topic for our last panel today is alternative revenues for energy projects. We are seeing a lot of emerging revenue sources for projects, which we definitely should be tapping into as African countries, and in particular, the DRC. These include the carbon credits market that is rapidly gaining momentum, and other energy certificates that are as well gaining momentum in our continent. These alternative or emerging new revenues can help improve the viability of our projects. And not only that, they are all tied to community benefits and all tied to unlocking more capital from private sources. So our panel today will be speaking about the products that are on offer, their experiences with these products, and how we can continue to scale the utilization of these products to improve viability and to raise more revenue for our projects. I'll welcome my panelists to the stage after I make my presentation, which is on one initiative that the Global Energy Alliance has recently launched. I'll ask for the slides to be put up. So last year, during the COP event in Egypt, the Global Energy Alliance, Sustainable Energy for All, Rockefeller Foundation, and the United Nations Economic Commission launched an initiative for carbon markets in Africa. This initiative is meant to increase the access of African projects to buyers in the carbon market space. The challenge that we've been having is a lot of projects that are being developed are not getting into the marketplace, and so they are not benefiting from the massive potential of the resources there. One key barrier is the cost of onboarding projects onto these carbon markets. It is a very, very high cost, or has been a very high cost, and our main intention is to help project developers, number one, understand how to develop a carbon project, so build capacity, and number two, make it accessible, so have financial instruments that make it easier and more affordable for project developers to access these markets. These markets have primarily been dominated by nature-based solutions, which is conserving forests, and such kinds of efforts. But we do see an opportunity for energy projects as well to benefit from this. So I'll take you through a very short presentation of what the initiative is about. And after that, we'll have a very, very important discussion with people who've actually experienced what this means. And I think we will be welcoming everyone who's developing projects here to think about utilizing these resources once we are done with this discussion. Yeah, as that gets sorted out, as I mentioned, one of the key things that we have in Africa is a continent that has a lot of potential to generate a lot of carbon credits. And that is because of, number one, so number one is, let's go to that slide. Next one. Next. Yeah, so I'm not sure it's very clear, but I'm sure the lines are very clear that this is years from 2016 to 2021, 2 years ago, and this is the amount of carbon credits that have been generated in the continent. And as you can see, it's been a growing trajectory, and we're hoping to make it even steeper in terms of accelerating how much more we can do. by providing the capacity, as I mentioned, and the financing that is required to make the bigger numbers a reality. Let's go next. And the next. Yeah, next. Yeah, so one of the key things that we found out when we were releasing this report and launching the initiative is that only 5 countries in Africa are actually making or utilizing the potential of these markets. And they contribute about more than 65% of the entire carbon pack that has been generated so far. As you can see, these countries are Uganda, DRC, Zimbabwe, Kenya, and Ethiopia. So DRC is part of that. But I think the potential is limitless when it comes to the DRC. There's a lot of, number one, a lot of forest and land use potential. So a huge part of DRC is green, and I think all of it. So a huge opportunity to capture that. But the top part, which I want to focus on, is on renewable energy and how renewable energy projects can tap into this market. So far in Africa, they've been contributing about 10% of, or 11% of all the capital that is coming in from carbon markets. And I think, 11% is not such a bad number, but if we increase the number of projects that we have in the portfolio, the number of projects that are accessing these markets, this is potentially a very, very large sum that will be flowing into the continent. So the potential that we calculated last year, and as you can see, we're here at the first box. And what we think is that by 2030, we can mobilize about $6 billion of capital into the continent from carbon markets alone. And this will support about 30 million jobs either being created or being supported. This is such a huge number, I would say, at this moment. But the potential is not just that. We see in 2050 hitting such high numbers as $200 billion coming into the continent. For us, we see this as an opportunity that we need to start harnessing right now. We need to prepare ourselves. We need to make sure that we have processes and systems that allow us to onboard our projects as soon as we start developing them onto these platforms, so that we can tap into this amount and use it to develop even more projects. So carbon is the revenue you get from carbon that we will be discussing is, the community needs to benefit for sure, which is, we get more social services being availed at a more affordable rate, etc. But we also can use these funds as collateral to raise more money. So where there's a lot of risk that is already being seen, as has been discussed here over the past 3 days, this is one of the mechanisms that we can use to de-risk investment and de-risk the fundraising component of the work that we are going to be doing. So this not only being a tool to improve your viability, I think it is a very important one to be part of so that you can raise money more easily. And I think there can be a conversation in future about reducing the cost of the money that you receive if you have this sort of collateral. Next. This will be probably my last slide, but I don't think it's very clear. But we identified 13 areas that us and the whole ecosystem should work on to make sure that this becomes a reality. And these are in 3 big buckets. The first one is supply. So as I said, we need to make sure that we have a huge pipeline of projects going into these markets. So there's need to build capacity for project developers. There's a need to build systems that allow you to replicate your project development, and you don't need to be redoing or re-engineering project development. The second bit that is very, very important, the extreme one, is demand. So one of the key things is that there are a lot of companies, particularly in the US and in Europe, who want to buy our carbon credits so that they can achieve the regulations, or every other, first of all, the regulations, but secondly, some of them are voluntary buyers for these credits. They want to lower the amount of emissions that they actually are reporting, and so they offset that by buying our credits as they continue to figure out ways to reduce their emissions without affecting their profitability. So we need to be able to bring on more buyers, and we need buyers who are already there. So as projects get developed, there's already buyer, and that means it becomes a very secure transaction where there's already market and everything. The last bit in the middle is intermediation. So as every other marketplace, there's a need to have a system that helps connect the producers to the buyers. So that also needs to be built. There have been a lot of questions about integrity of carbon credits, and are they high quality? Is there any benefit to community? So that is the middle bit, making sure that they're high quality and the community benefit is very clear. And I think another aspect of that middle sector is financing. So projects, for them to be executed, they need financing. So how can we make sure that the huge pipeline that we are developing is, it is well financed, and we can move as quickly as possible from concept stage all the way to actual implementation of a project. So we need to make sure that there is financing that is ready and that is willing to come in. And lastly, one factor that we cannot emphasize enough is the policy enabling environment. So we've talked about it a lot, and I'll not cover that so much. So there's always a need that the policy that is there is supportive of what you're trying to achieve. So if it's about quality, if it's about the taxation, if it's about the projects that can be done in the country and that can participate in these markets, that the government is providing a unique and enabling environment. And each country has its own uniqueness. I would say, DRC has already been trading in these markets, but there is a need to make sure that in the current wave, we are creating a system that everyone actually benefits. So in terms of that, one of the main things that our initiative tries to do is to do market activation plans in every country. So this is sitting down with governments and all stakeholders and identifying what should be done, making sure there is participation by the citizens and the communities that are supposed to benefit, and putting all that into a cohesive policy instrument that allows projects to participate in the markets, but also buyers to feel secure in buying credits from this country. So I'll stop there, and I'll end by saying that all the projects that are being developed right now, there is an open call for registering all these projects on the ACMI platform, Africa Carbon Markets Initiative platform. I'll share the website address for that. So you can register your projects there, and we will be trying to see how we help projects move from one stage to the other so that they can quickly progress through the whole value chain end to end and get the benefits at the end as soon as possible so that they can use those funds to actually develop more projects. So we welcome you all to register your projects and continue engaging with us so that we can set this up very well and have it as a very solid structure that attracts investors, attracts the buyers into this market. I will stop there, but thank you very much for listening. So now I'll invite my panelists on stage so that we can have a discussion on what I've talked about, but on even more opportunities and more alternatives for these new and emerging revenues. I'll start with the first panelist, and most of them will be familiar because they were here in the morning. Our first panelist will be from CAMCO. The head of policy and partnerships. Please welcome Ayeva into the stage. I struggled with the second name. Anyway. Our second panelist from Husk Power, the chief evangelist of Husk Power. Please welcome William onto the stage. Our third panelist from Nuru. Welcome Achip, co-founder and director at Nuru. So those were here before, but at least we need two more new people. So I welcome our fourth panelist from Gogla. Is the regional head of strategy for Gogla, Mr. Patrick Tonui. And I will be the final panelist on the stage. So thank you very much, everyone, for being here with me. The key question that everyone has when you talk about carbon markets and other attributes that can be monetized to create more revenues for projects is, number one, why should I be doing this? Why should I spend my time thinking about, developing a carbon project or developing another attribute when I already have a hard time developing the actual project itself? And I wanted, developers who've handled or who've been through the process to talk about this, talk about what the experience was developing these projects on this carbon side, and also what the benefits were for their consumers. As all the developers have been saying before, any benefit to their consumers or their customers is a benefit to them, and they all try to make sure that their consumers are at a good place economically so that they can contribute to the viability of their projects. But I'll not say a lot on that. I'll let our two developers who are on either side, left and right on my side, to tell us more about their experiences developing this project and what their recommendations are or the learnings that they have from this, from the work that they did on this. And then I think that will be a good building block into why we are really concerned or why we feel that this is something that we should be spending our time doing. So I'll let Hasper William go first. Just share with us your experience, share with us the learnings, and share with us why developers should be thinking about working on this sort of carbon projects and energy certificates.
Okay, thanks, Dennis. I think everybody obviously knows that diesel generation dominates rural economies of South Asia and Sub-Saharan Africa. So there is for our business, the mini-grid business, there's a huge opportunity to displace that diesel generation and replace it with solar energy. By doing that, we're offsetting carbon emissions. We're avoiding carbon emissions. So Husk has looked at this issue from three different perspectives. First, about 5 years ago, we went through a pretty long and expensive process to develop a certification with the UN FCCC that quantified our avoided carbon through displacing diesel generation. And we started monetizing carbon offsets about 3 years ago, I want to say, where we used the methodology approved by the UN FCCC. We worked with a partner called South Pole, and we determined a value based on the price of carbon at that time, and pre-sold for 5 years the carbon offsets based on that price. So we've been monetizing the voluntary offset market for about 3 years. Unfortunately, the price of carbon at the time of that agreement was quite low. It's much higher now. So we're kicking ourselves a little bit for locking ourselves into a 5-year price. But as I mentioned, that's a very burdensome, for a company like ours, which is still relatively small, that's a big burden. You have to hire a consultant, you have to go through a very lengthy process, and so, is that for everybody? Probably not. The other thing that we look at is what are called DRECs, renewable energy credits for decentralized energy. And we just did our first DREC deal in Nigeria about a month or two ago. And essentially that's renewable energy credits, it's not offsets, and so there's a international market for RECs, they're called, RECs. And that's actually turning out to be quite interesting, so based on our initial experience. As I understand it, so the idea behind a DREC is that they can charge a premium for the certificate because our projects have greater impact than just a straight solar generation asset. We have economic and socioeconomic impact on the communities that we're serving, and because that is additionality, we are able to sell, or the companies that trade in the direct market are able to sell those RECs for a higher price at a premium compared to a normal REC. Just to give you some numbers to put that in context, an international REC typically costs or is sold for $1 to $5 per megawatt hour. The direct market can range from $10 to $50 per megawatt hour. In the case of Nigeria, where we did our first direct deal, we received on the higher end of that number, or close to $50 per megawatt hour. That's unusual. It's typically between, I would say, closer to $30 per megawatt hour. So it's a significant premium compared to international RECs. And then you can also sell RECs for C&I projects as well through this direct model. The cost or the price is lower. It's about $10 per megawatt hour. So that's a new, and that platform is very, very new. We may be the first company or one of the first companies certainly to take advantage of that. So we'll see how it evolves, but we're already seeing companies like Salesforce, which are looking to purchase RECs, go into this market and purchase that. So I think that's the last thing, and maybe I'll talk about that later, is, are we able to monetize adaptation and climate resilience? Nobody's really done a good job of figuring that out yet. We're taking a look at it, and I think it's worth exploring and discussing maybe, but I'll save that.
Great, thank you very much. I think from that it's very clear that it's significant revenue for any project developer, and it is actually a core benefit. It's not asking you to do a lot more than what you will do as your normal development and community engagement cycle, but it's telling you to make sure you document that and just access markets that can offtake that and feel that the impact that you're creating is something that you should be rewarded or you should be paid for. So I think it's a really, really big opportunity. I'll go on to Achip from Nuru, and we'll look at it from the other side. So once you've been able to raise this money from these markets, what is the impact of it to a developer? What is the impact of this money to a community? And what has been your experience since you've gone through this process?
Yeah, thanks, Dennis. I think I'm gonna just speak in French to allow the French audience to clearly understand. Donc, étant que développeur dans le secteur de l'électricité, il est clair que nous avons des obligations sociales, et à partir du moment où nous avons rendu l'électricité disponible aux consommateurs, n'est-ce pas, il se crée de plus en plus d'autres besoins. Les besoins que nous avons observés, que nous avons reçus des clients et des communautés que nous sommes en train de desservir en électricité sont d'abord d'ordre sécuritaire. Et donc, les gens ne veulent pas seulement utiliser l'électricité pour des demandes de cuisson ou encore de production ou de fonctionnement de leur business, mais veulent aussi accéder à l'électricité publique à des éclairages publics pour des raisons de sécurité. Alors, très souvent, étant co-développeurs, nous n'avons pas assez de moyens, n'est-ce pas, pour essayer de répondre à tous ces besoins et ces exigences communautaires. Il s'est aussi soulevé d'autres problèmes par rapport aux tarifs, parce que, effectivement, étant que développeurs, nous devons se rassurer que le capital investi vont être optimisés. Nous allons rentrer dans les investissements, et que deux fois, il arrive que les populations avec de pouvoir d'achat le plus faible soient exigeants en termes de tarifs, et qui souvent n'est pas un exercice facile à y répondre. Donc c'est comme ça, dans ce sens-là, que nous avons observé les besoins de mobiliser d'autres capitaux additionnels, et c'est dans ces contextes-là que effectivement le crédit carbone était devenu un outil important. D'abord, d'emblée, je vais rappeler que le crédit carbone, c'est un crédit qu'on octroie sur les sources d'énergie renouvelable. Et aujourd'hui, parce que nous sommes dans la transition énergétique, avec les besoins criants d'atteindre l'objectif net zéro, tout en accélérant la production des énergies renouvelables, a fait de décarboniser notre planète, n'est-ce pas, à créer, n'est-ce pas, des outils incitatifs tels que le crédit carbone qui intéresseraient de multinationales, n'est-ce pas, qui ont des opérations partout au monde, mais ne savent pas rapidement accélérer aussi leur transition énergétique. Ils vont auprès des développeurs comme nous et de vouloir acheter les crédits, n'est-ce pas, en termes de mégawattheures de capacité produit de l'énergie renouvelable. Donc, nous avons été parmi les premiers bénéficiaires de crédits des énergies renouvelables pour la paix, dont PIREC, qui est souvent destiné à des pays en voie de développement, des pays à conflit, n'est-ce pas, et de populations avec des pouvoirs d'achat plus faibles, et donc qui vont auprès de ces grandes multinationales, des corporates, pour que ceux-là aussi achètent les crédits et qui permettent d'une manière ou d'une autre de contribuer à l'accélération de décarbonisation. Donc, Google et Microsoft ont été parmi les premiers bénéficiaires, premiers acheteurs de nos capacités des énergies renouvelables produites sur le site de Bunia, plutôt de Goma à Tadou Faradje, qui nous ont en fait donné un capital additionnel flexible et nous avons alors répondu aux demandes, aux besoins criants de population en termes d'éclairage public. Donc nous avons pu acheter des lampadaires et effectivement aujourd'hui, dans les zones où nous opérons, les populations ont maintenant des éclairages publics et se sentent de plus en plus en sécurité sur cette question. C'est vrai que les lampadaires consomment des charges, aussi d'électricité, et donc ces charges d'électricité que nous dédions pour les énergies renouvelables, qui constitueraient des manques à gagner, n'est-ce pas, pour un développeur privé, ont été compensées, n'est-ce pas, par le revenu additionnel de ces crédits d'énergie renouvelable. Il y a de plus en plus aussi besoin, effectivement, en termes d'optimiser nos investissements pour répondre aux questions de tarifs, n'est-ce pas? Mais cela demande à ce que nous puissions avoir de capitaux flexibles en amont, n'est-ce pas, pendant la phase de développement et de clôture financier pour effectivement réduire le tarif. Et donc, avec PIREC, nous avons été à même, effectivement, de mettre en place des modèles qui permettent de justifier la capacité de l'électricité que nous projetons produire et qui permettent à ce que nous puissions avoir de capitaux en amont, de crédits vendus, injectés dans le CAPEX, afin que cela puisse avoir effectivement des impacts réels en termes de tarifs et au bénéfice du dernier consommateur. Donc nous avons vu réellement des avantages et des impacts pratiques qui aujourd'hui constituent des réels motifs pour que les développeurs s'intéressent à ce stade au crédit carbone, mais aussi au crédit des énergies renouvelables pour la paix. Donc je vais d'abord m'arrêter à ce stade.
Thank you very much, Achip. And I think that paints a very good picture of what it means to get involved in this sort of projects. You're getting your extra revenues on this side, and on the other side, you're supporting your communities by offering them affordable electricity and giving them benefits over and above just the electricity supply. I'll mention a final case that I'm aware of, which has been a very successful case of utilizing carbon credits to ensure access and inclusivity. So improved cooking has received a lot of carbon financing in the recent past. And the main reason here is if you are cooking with firewood or charcoal, if you get stoves that are more efficient, it means you use less of the wood fuel, and it means we are, reducing deforestation, and being, again, it's just being efficient, but also the user experience is improved for the person who is cooking. This market has raised a lot of money from the carbon finance markets, or rather from these sources. And the impact has been a price reduction in the cost of the stove that you actually buy for your use at home. So these stoves in Kenya, they cost about $30 to $50. But when you incorporate the funds from the carbon markets and from all these markets, these stoves are sold at a reduced cost of about $3, which is cutting the costs. It's sort of you divide the cost by about 10, which is, it makes it very affordable. And these companies are able to continue to monetize the carbon credits to offer very, very innovative and very good charcoal and wood stoves to people who would otherwise not have afforded them. So again, this is another benefit. And one of the key things that we should be aware of is that all these benefits are meant to be gotten at all levels, but mostly the priority is at community level. That communities who are taking care of forests, the communities who would have felt the impact had action not been taken, are benefiting from the money that is trickling down. So it's quite unique and very, very useful that we make sure that all the money that is being tunneled into countries is being felt at all levels, because that is the only way development can be done. And I think I really liked the previous panel when someone mentioned that electricity suppliers are not only supplying the electricity, but they also need to play a part in the rural development of these communities. So this is a mechanism that is, it's already entrenched in the way it's designed, that communities must benefit. So it's really in line with that statement of developers being in charge or playing a big role in community development. Now, please do.
So just one other thought. I mean, I don't disagree with the fact that this is an opportunity to help improve our business, right? But it's an additional revenue for the business. But I do want to caution, at least from our perspective, we build smaller systems than Nuru. It's incremental, right? It's an incremental revenue source. It's not a game changer for us as a business, right? And I just want to make that clear because, we, as I mentioned in the last panel, we are a very cost-sensitive business. So any additional revenue is very, very helpful. And then the other thing that I wanted to mention is that, I think for us anyway, what we see, the main benefit for the communities is in the getting rid of the diesel generation, right? It's the air pollution and the cost savings, really. It's not so much a benefit other than that. I mean, the businesses that we serve in the communities where we have our mini-grids, they're saving 35 to 40% on their monthly energy bill by changing from diesel to solar. And I think that's the extra benefit that we're bringing to the community. We're actually helping them to reinvest in their businesses, to hire more people, to start new businesses. So I just wanted to mention that as well.
Thank you very much. I want us to turn to Kamko for the next question. And this is, I started by mentioning that this tool is not only beneficial in the ways that Achip and William have mentioned, but also for financiers, they want to look at these tools as de-risking mechanisms for investment and provide avenues that developers and more investors can raise money against a collateral of either carbon credits or the renewable energy certificates. I'll let Ayeva tell us about the instrument that they're looking at and how that, what the impact is on investment and fundraising.
Thanks, Dennis. And again, I'm again on the panel. This time to share something a slightly different perspective on the work that we're doing. So I'm here, I guess, both as an investor, that's directly to sort of Dennis' question of how would investors look at this, but also as a fund manager, and I'll tell you a bit more about the facility that we are currently designing for PREX. So as an investor, I don't think that we have kind of been at a stage yet with the REX market, at least, where we would be presented a deal, that would include that concessional capital coming from the REX. Partly because the market is new, and largely also because that revenue that I will want to highlight shortly comes normally afterwards. So it comes as the projects are already operational and they are delivering either carbon emission savings in the case of carbon credits, or renewable energy megawatts, so power produced in the case of REX. So for an investor to be able to, for this kind of capital to be able to de-risk investments, that would have to come in at an earlier stage. And this is exactly what we are trying to do now with the concept of PREX. So the PREX, which stands for Peace Renewable Energy Credit, as both, particularly Arship has mentioned, it's a concept sort of with additional value on the REC environmental attribute. The peace element stands for the fact that these RECs are delivered by projects that are based in conflict-affected and climate risk-affected environments, of which DRC unfortunately falls under. Fortunately or unfortunately, depends on how you look at it. The concept was developed by an organization called Energy Peace Partners, or EPP, and they are the issuing agency now under the international IREC standard. We, as CAMCO, are partnering with EPP to design what we call a PREC aggregation facility. This facility that we are aiming to design and fundraise for will be able to provide financing to developers on the basis of projected PREC issuance. So it will allow us to actually provide the financing that we anticipate the project to issue over its, perhaps not the full lifespan, but over a number of years, at financial close. Whether the expectation, of course, is that this will be then, it will be possible to use this as the concessional capital to or not concessional, but sort of grant capital effectively. So to be able to de-risk the investment, to say that, part of the project financing costs, we expect, depending on the project size and its capacity, generation capacity, we expect that it could finance up to 10% of the overall project costs, to be provided at financial close. So there would be an agreement with the developer based on the project specifics of how many PRECs might be delivered over the particular lifespan, and then it would be up to us to then monetize those PRECs and sell them to the corporate clients, basically. So what we're trying to do to be able to do this is to secure financing at the facility level. So as a fund manager, that's our bread and butter, so that's what we do. We're fundraising into the facility so that then we have the capital to deploy upfront. We don't need to make these sales as the RECs are being generated. We hope that this will be transformational. At the moment, it's in the initial stage. Even the facility that we're designing, we're raising only for a relatively small facility. It will be a pilot. Why it will be a pilot? I think it's clear that it could benefit the market in different ways. There are a lot of projects in DRC and other countries that could benefit from it. The bigger question is the demand side, the demand being the corporate demand to buy the PRECs, and that's something that we still need to test to some extent. So yes, there have been very successful purchases and commitments even for longer term now to purchase RECs, DRECs, PRECs from companies such as Microsoft, Block, etc. But whether, that's at the moment, these are still single cases. So they're great examples, but we need to see whether this market will scale, and that's also what we are trying to work out at the moment. So we're trying to also stimulate that through our internal resources, reaching out to the corporates and trying to make them commit to these purchases for the future. So that we can then combine that into the facility and be able to offer this income source for the developers. I hope that maybe clarifies the question.
Thank you very much. And it's quite interesting that the PREC angle, which is pre-financing, is going to again be very helpful for developers at that sort of the concept stage and building stage, And I think it's really something that we're looking forward to see. So all the best in that. I'll turn over to Patrick, who represents a lot of off-grid companies, which are indeed looking at these opportunities. I think, Patrick, just an open question about what Gogla members are doing in this field, and what support you think is required to accelerate this so that they can leverage on this opportunity.
Thank you, Dennis. I hope you can hear me. All right. So I hope I'll take a more practical approach to this answer. And I think I want to start by going big picture, right? Why do we actually care about both climate finance and the carbon credits? We know that if we're going to make sure we don't leave everybody behind, we need about $20 billion of investment, finance and investment by 2030. And where is that money going to come from? Today, I think you're seeing a lot of money and commitment going towards climate and climate investment. So those of us living in Africa, those of us living in countries with low energy access, we need to see climate smart transitions, and we need to finance that. And a lot of where this money will need to come from is both the climate investment as well as the carbon market. And this is something we have been trying to do as Gogla, working with our members. Our members are primarily off-grid energy access for lighting, for productive use, and other applications. Today, if you go to a country like Nigeria, there's about 20 million diesel generators and petrol generators that are being used for lighting or for pumping or other applications. How are we going to get people off of those applications and go to solar-powered or renewable energy transitions? Especially, how are they going to be able to finance that? And this is where we think some of the climate investment and the carbon markets are going to be able to make a big transition. Dennis has given an important example. This is in the clean cooking space, where we've been able to see companies actually price the carbon impact of a clean energy cook stove, reduce the cost, and also not just keep it to themselves, but pass on that benefit to the end user, the person that is actually buying and using this renewable energy product, and have a direct benefit. We've seen the same in solar irrigation today. If you go and buy a solar irrigation pump, you're seeing our members and the companies try and say, if somebody avoids using a petrol or a diesel generator to pump water, and they use a solar one, what is the carbon saving, and how do you price that and pass that benefit and tell the farmer who's taking a solar irrigation pump, here, for making or buying a solar pump, here is the benefit, and you see a direct price reduction. Lastly, also in lighting, if somebody is using, not using kerosene lanterns, which is a big problem that we continue seeing, and they pick a solar lantern or a solar system instead, how do you also pass that benefit directly? I think some of this is still being experimented. We still need proper standards and quality in the design of the carbon credits. We've seen, I think, over the recent past that because of poor design, or where people design a market but the benefit is not being actually felt, that some markets have actually seen that they rise for a short period of time, but they're not sustainable because the quality and the value of that credit is really not there. So one of the questions we are pushing for and really having a conversation with the government and other partners like in the UN is, how can we design effective markets that you have a quality credit, and also how do you price that credit right so that the net impact, I think William has articulated it right, where it may not just be $10, but it may be $50 if you actually capture the net impact of that credit, so that the price of that credit actually goes up. One caution that I would give, and particularly to the government as they do this, we saw as more and more governments are trying to tap into these carbon markets, that they're trying to, in some cases, own the credit, that the benefit goes to the government. And this is probably not the right way to go. And also in terms of the taxation. I think we saw there was an attempt in Tanzania to put a tax of up to 60% of the value of the carbon credit. Therefore, the value back to the industry goes away. So for every dollar, if you're getting 40 cents of the dollar and the rest goes back to the government, what is the net benefit to the both to the company and also to the consumer if a lot of this goes in taxes to the government? So I think these are the things that we really need to wrestle around so that we activate a vibrant carbon market here and that we keep an eye on the net benefit, which is back to the consumer, whether it is in lighting, in the cost of electricity, or in the other uses, whether it's in the farming or in the productive use that you're having. And we need to get these pieces right. Thank you.
Thank you very much, Patrick. And yeah, there's all these things that need to be done to make sure that we are creating more and more and enabling an ecosystem, and that governments and private sector and government partners are working together to make sure that everyone can benefit, and the impact can still be felt where it needs to be felt. Before we go to the next or to the last questions for my panel, I'll welcome any questions from the audience on this topic. Much deeper conversations can be held after, but any burning questions are welcome at this moment. Yeah, so I think the microphone is coming around to...
Merci vraiment, ça c'est un thème extrêmement intéressant. Il y a une autre possibilité effectivement de stimuler l'électrification de la RDC à travers notamment le crédit carbone. Je voudrais poser d'abord la première question au modérateur principal qui a fait une présentation intéressante, où il a donné notamment des chiffres pour certains pays africains en ce qui concerne les revenus des crédits carbone vendus. Bon, j'ai vu là, pour le cas spécifique de mon pays, de la RDC, vous avez parlé d'environ 13 millions, je ne sais pas si c'est ça le chiffre, ça représentait au fait 11% environ, comme vous l'avez dit, sur le total de ce que l'Afrique a reçu. Bon, et en ce qui concerne la RDC, je voulais savoir si tout cet argent venait exclusivement du secteur de l'électricité ou plutôt de la forêt, puisque je sais qu'il y a quelques entreprises qui font de la protection de la biodiversité, notamment de la protection des forêts, et qui ont commencé à vendre leur crédit carbone en termes de carbone séquestré par la forêt sur le marché. Ma deuxième question, puisque c'est vraiment un stimulant, pour bien stimuler les autres opérateurs qui hésitent, d'autant plus que si on parlait vraiment des chiffres, puisque là, ma deuxième question, c'est à nous. Ils ont parlé de quelques revenus, mais je ne sais pas pourquoi on doit garder secret. Il faut dévoiler quand même les chiffres pour essayer réellement de stimuler. Nous sommes là dans un forum sur comment stimuler le marché de l'électrification de la RDC. Donc ça peut donner aussi un engouement vers effectivement les énergies renouvelables. Si vous donnez des chiffres, les gens, ceux qui développent des projets, ils peuvent déjà utiliser des scénarios, et utiliser leurs outils de calcul, puisque c'est là aussi le problème. Bon, la troisième question, je ne sais pas si c'est l'excès, pour moi, je ne sais pas. C'est juste aussi à vous, puisque il y a un souci du marché carbone. Il y a trop de commissions, et puis il semble que le coût réel sur le marché, ce n'est pas, surtout pour nous des pays en développement, ce n'est pas le prix que nous on vend. Il y a trop d'intermédiaires, ils achètent peut-être à $50, puis ils viennent vous vendre à $5, c'est-à-dire ils gagnent même plus, 10 fois, 50 fois plus que ceux qui font réellement ce travail soit d'atténuation ou de séquestration. Voilà les quelques questions que j'avais.
Yeah, thank you very much. I'm Ben Hagen from Beyond the Great Fund for Africa, BGFA. This is meant directly to our representative from Gogla and our lady panelists. Is there a regulatory mechanism to ensure that private sector beneficiaries of climate funds pass part of the benefit to consumers, and at what level? Thank you.
Thank you.
We'll take the question from you. Yep.
Yes, thank you. This is Danny Biabene from the Project Management Institute. My question goes to Madam. I want to know, you said that the new model that you are putting in place is to pre-finance the RECs. So I want to know, what are the measures that you are putting in place to reduce the risk and make sure that what is in the project not yet implemented will definitely be implemented, and make sure that the benefit is coming out? How do you make sure, assess the developer or the stakeholders with you are financing, that they are able and they will deliver what is written in the project? Thank you.
Thank you. And the last question at the back. Yeah.
Yes, thank you. My name is Yongwa from Altec Group. I have two general questions. The first question is, given the fact that the market is still new at its takeoff stage, so there are so many questions for clarity. My first question is about, what are the key carbon market rules in the entire value chain, like the rules of the game? Is it like in the real business, the laws of supply and demand, or is it like a one-size-fits-all approach that only buyer countries are the ones determining, for example, you know, the prices of in terms of the tons, you know? So that is the first question. The second question is about, what are the current determining factors or facilities that are guiding, you know, the
Thank you very much. I think we'll attempt to answer those 7 or 8 questions. And I think my panel will be, they'll be answering them on behalf of everyone here, or on behalf of us. I'll start with you, Patrick, and 2 questions. Number 1 is, what are the numbers? I think that was a question from someone, that if this is a transparent effort, what are the numbers that your members are seeing? And number 2 is, what are the rules, or what is the regulatory mechanism to make sure that any benefit that companies that are part of your membership, once they get the funding, that they pass it on to the community? Yes.
Okay. I think on the number side, I don't have those at my fingertip. What I do know is we are seeing different indications based on the use. So for example, if you're dealing with lighting products, the small ones, like solar home systems and lanterns, the price per unit is much less because of its carbon impact versus if you're seeing a productive use appliance or like a cook stove. So I can, if the person follows me, we can try and push some information that we have. But the second question, which is around how do we, or are we sure that the benefit is being passed to the consumer? At this point in time, I think I'm not aware of any regulation or any mechanism that requires it to be passed on. We are trying to I think this would be something really quite good to make sure that that benefit is passed on to the end user or the generator. But I would also caution that the benefit we may see it may also be in a blended approach. One could be either a direct reduction in price for the end user, or in some cases, in some communities where they are not reachable without that overall reduction, then we may not see that direct price reduction, but other ancillary benefits. And let's not, not appreciate that may be necessary. But I think these are some of the listed questions that really need to be addressed to make viable markets and viable ecosystems.
Dennis, can I answer that last question too?
Yes, so I'll ask that plus an additional question to William on the mechanism to make sure that the benefit actually flows to the communities, but also what are the pricing rules in the carbon markets? Now that you've dealt with the carbon markets, you're looking at dealing with renewable energy certificates. What are the rules of engagement and pricing?
Yeah, so for pricing, I mean, the carbon market is a fluid market, right? It's an international market, and the price varies as the market shifts. When we sold our offsets for our projects in India, I think the cost for per ton of CO2 that we paid, or we were paid, I think it was around $4 or $5. Now it's probably 2 or 3 times that. So, you know, we left money on the table by negotiating that price, but it was worth it because it was, we forward sold for 5 years, so we got all of that revenue up front. So for us at that time, that was an important revenue stream, so we took that. In terms of the rec market, it's really what the market will bear, and that's what we're trying to understand right now, or at least the rec companies are trying to understand. How much of a premium will companies like Microsoft, Salesforce, Google, the ones that are already purchasing these recs, how much are they willing to pay? And that's something that I think we're still finding out, right? As I mentioned earlier, we're seeing a premium. These companies are willing to pay more than an international rec, considerably more, you know, let's say 5 to 10 times more in some cases. And so that's where it is right now. Will that be sustainable over the long term? I think it's still too early to tell. And maybe you have thoughts on that as well. Yeah. On the community, yeah. So, you know, our industry is young still, the mini-grid industry. Any additional regulatory burden on our industry is not something I support. You know, any additional requirements for us to show that we're making impact, we're making impact. We're going into communities, we're electrifying those communities, we're doing rural development. We are often, you know, we are trying to drive the price of our electricity down every day. We're doing that work, right? I personally don't feel like we need to prove to anybody that we're, you know, passing on that benefit to the consumer. We're investing millions of dollars to go into communities that are unelectrified. And that's a huge contribution by itself. So my feeling on that is maybe midterm, long term, there's some framework that we could think about. But in the short term, let us scale our business first before you impose more regulation on us.
Great, thank you very much. So the question on the pricing mechanism, Eva, and also a question that came from this side on the execution risk of pre-financing projects?
Thanks, very good questions. On the pricing, it's a guess, right? It's an educated, yeah, it's coming out. Of course, so when we are designing the aggregation facility, that is what we need to do, which is to design a financial model that includes all of these inputs. I mean, we are looking at a number of sort of how the rec markets perform at the moment in different jurisdictions. What were the contracts signed already by EPP with Nuru and other project developers, and then making some further assumptions basically to put it into the model and see what it tells us. It is hard to predict where the market will move. This is why, as I said, we're piloting at a relatively smaller scale, to also test, to do a lot of work, a lot of legwork in trying to increasingly scale up with the signing of forward contracts with the commercial clients, and see what prices we're able to agree on in those contracts, and how that squares with the spot market and everything. So just in terms of how the facility would work, so once we would be signing a contract with the developer where we agree on a set price in advance. As William was saying, you perhaps felt that when the carbon, so I'm talking about PREX, but the carbon example you gave, that the market price went up after you signed this forward contract, so you felt that, well, on the one hand you lost out on the price, on the other hand, as you stressed, you had the capital upfront. And so this is what we're able to offer. We're able to offer the capital upfront, which is important for planning, whether it is for trying to de-risk the overall project investment, so putting it into, let's say, as part of the project financing, or whether you're using it for additional community benefits, specific sort of projects around the mini-grid, let's say, that you still need to plan, right? And you need to budget for it. So it's important to know what revenue, what income you might have to support this work. Then in terms of the question that was posed by a gentleman over there about the risk, so effectively when we will be assessing the project, I guess it will start very similarly to what an investment process would start. So, which is of course what we've been doing for many years now, through our investments into renewable energy. I mean, it includes a lot of elements, but yeah, you do need to assess to what extent you consider the project to be a viable project, what's the strength of developer, etc. So we will go through this process. On top of that, we will then apply additional criteria that will be the eligibility criteria of PREX. And yeah, that's not so much the risk, but more focused on the impact. So are they in the right geography for PREX? Is it a new or expanded project because PREX specifically want to deliver new connections? So we're looking primarily at mini-grids and isolated grids, because we believe that the new connections and energy access can deliver peace sort of benefits. And a number of other criteria. But maybe also to stress that, so from the PREC aggregation fund perspective, we would be paying out we expect that we would be paying out at financial close. So that's after the sort of early development stage and full development stage is basically finalized. The contract may be signed earlier on to allow the developer to seek financing with already knowing that they will have this revenue coming from PREX, anticipated revenue, but the paying out would happen at financial close. So by then, the development risk basically has already been mitigated.
Thank you.
And sorry, in terms of maybe there's one additional risk actually that we need to take into account, which is the production of renewable energy credits. As in, we obviously have to assess, how many megawatt hours we expect for the project to deliver. And again, then in terms of calculating the PREX to be issued under the contract, we would have to take a view on, I don't know if you're familiar with the concept of P90, P50, sort of probability of delivery of megawatt of renewable energy power. So to what extent there's a 100% probability that you'll deliver an X amount, smaller probability that you'll deliver a higher amount, and so based on that we'll make an estimate for the contract.
Thank you very much. Achip, on the question from Altec on investor-investee relationship, now that you've been part of a transaction, what are your comments on that?
Thanks. First of all, I'll just, bon, je vais parler en français. D'abord, je dirais que je ne parlerai que pour le Pyrex et le contrat que nous avons réussi à signer avec Microsoft et Google dans cette transaction. Le prix par kilowatt-heure est autour de 4,1 centimes de revenus et sur le 1,6 MW de capacité installée actuellement de Nourou, cela représente à peu près 200 000 dollars annuels. Nous avons 13,7 MW que nous projetons mettre en service mi-2024, qui représenterait approximativement 1 million de dollars annuels. Et donc, effectivement, tout cela dépend de ce que le prix sera sur le marché en termes de stabilité dans les jours à venir. Mais ce sont déjà des bons indicateurs en termes de ce que cela pourrait générer comme revenu additionnel.
Thank you very much, Achip. Cognizant of the time, I think we'll close it at this point. I think you've seen all the actors on stage, and a lot of the four of them have different experiences with the different products that are available on offer. So you're all welcome to have conversations with them after this, at the end of this. I think to summarize everything that I've heard from the panelists, and I've really learned a lot as well. There is massive investments are needed, as Patrick said, in the sector, and we should try to bring on all the investments that are available on the table so that we can make the impact that we want. All the initiatives that have been spoken about here are opportunities for not only the financing bit, but also new revenues for the developers, so they're all highly appreciated. And the significance to the community, as has been pointed out, is a critical component of carbon markets and the renewable energy certificates in whatever form they are coming. So they can help reduce the cost of electricity if given as a subsidy, but also they enable the offering of maybe social services like Nuru are doing with street lighting, and additionally improving the quality of life by just decommissioning diesel generators in communities, which means that in future there will be reduced health problems for these communities. I think there's a huge potential, as I stated by saying, and the huge potential is because in terms of forestry, we have significant forest reserves. In terms of energy projects, we have to electrify about 600 million people. So we'll continue to build a lot of projects, and that is a huge opportunity to get this extra revenue. I think the way I end it is by saying there's still a lot of work that needs to be done to make this seamless, to make it simpler, to make it accessible and available, to make it equal and just match prices. Has been asked, how do you determine prices? There's still a lot of work to be done, and all this work needs to be done as a collaboration between governments, between the private sector here, investors and the government partners, which I think a lot of that has been seen, and there's a lot of commitment to do that. And maybe the last bit, which I think is very useful to reiterate what William has said, that this is another source of revenue. It is not a significant, it's not going to change your whole economics, but it is, what we think is you have to combine a lot of things, a lot of instruments, a lot of interventions to get to the viability point that we want. And this is one of the contributors to that. So let's see how much we can take from it, but still remember that we need to do a lot of other efforts to make our projects viable, to make them bankable so that we can bring on the level of investment that we want in the continent and we want in DRC. Thank you very much, everyone. Appreciate the panel. And thank you for being a very good audience for us. Thank you.